Assalamualaikum and salam sejahtera. I bid to Madam Mariam. My name is Junaila binti Yusa and I am here with my teammates Faznur Ashikin, Nurul Hazira Mesara and Vanessa Venastepan. We are pleased to present our group project on operating segments and interim financial reporting for our selected company. Without further ado, let's begin with part A, which focuses on operating segments. According to FAR570, an operating segment is a component of an entity that engages in business activities from which it may earn revenues and incur expenses, and those operating results are regularly reviewed by the entity's chief operating decision maker to make decisions about resources to be allocated to the segments and assess its performance, and for which discrete financial information is available. An operating segment also may engage in business activities from which it has yet earned revenues. For example, startup operation may be operating segments before earning revenues. However, not every part of an entity is necessarily an operating segment or part of an operating segment. For example, a corporate headquarters or some functional department may not earn revenue or may earn revenues that are only incidental to the activities of the entity and would not be operating segments.
When we talk about the chief of decision making or CODM, we're not referring to a specific person or title. Instead, we're talking about the role or function in an organization that is responsible for allocating resources and assessing the performance of different business segments. This function is usually carried out by people like the CEO, the senior management team, or even the board of directors. But the important point is that the title doesn't matter. It's the responsibility for making key strategic decisions about how the company segments operate that defines the CODM role. At RSP Berhad, key individuals are responsible for driving the group's strategy and also performance. Dato Muhammad Rashid Muhammad, as Group CEO, leads the overall strategy, focusing on growth, efficiency, and financial goals. He ensures effective resource allocation and works to maximize shareholder returns while strengthening RHB's market position and guiding senior management. The second key decision maker is Dato Fadil Muhammad, who oversees group wholesale banking. He drives strategy and performance across areas like investment banking, corporate banking, and treasury. Dato Fadil's role is to create long-term value for stakeholders and ensure all business segments align with RHB's objectives. In short, Dato Rashid and Dato Fadil are critical in shaping RHB's strategy and ensuring the bank's success.
According to MFRS 8, business segment and geographical segment are the types of segmental report often used in financial reporting. Business segment is a component of an entity that engages in activities to earn revenues and incur expenses. It can be based on factors like products or services, geographical areas, or regulatory environments. A geographical segment is a part of an entity that operates in different geographical areas and generates revenues from customers in those areas. It includes revenues attributed to the entity's country of domicile and revenues from foreign countries where the entity operates. Here is the snippet of RHB Bank Berhad for business segment in financial year 31st December 2023. As you can see here, there is 5 activities segment of RHB Group in this financial year. And here is a snippet of RHB Bank Berhad for geographical segment in financial year 31st December 2023. As you can see here, there is only 2 segments presented, which is the RHB country of domicile in Malaysia and the other foreign countries that RHB operates. After identifying operating segments, apply the 10% quantitative threshold test to determine reportable segments. Segments that do not meet the threshold are combined under all other segments. The test includes revenue, profit, or assets basis. For our report, we use revenue basis. A segment is reportable if it constitutes 10% or more of the combined revenue of all segments. Here is our calculation based on the annual report. As for 75% threshold test, The total external revenue of the reportable segments will be divided with total external revenue of all segments to know whether it achieved the 75% or not. And from the calculations, it shows more than 75%. Therefore, the existing reportable segments, which are the earlier three segments, will be considered as reportable segments and no need to identify the additional segment in order to achieve 75% threshold.
For question 4, FAR570 require entities to disclose information that enables user of financial statement to evaluate the nature and financial effects of their business activities and the economic environment in which they operate. The question required to discuss two key benefits of segmental report for financial statement user, referring segmental report from a listed company in Malaysia. So, segmental report provide a clearer view of a financial health of each business line, allowing stakeholders to see exactly where strengths and weaknesses lies within the company. In RHB case, stakeholders can review the performance of core segments like community and wholesale banking. This transparency fosters trust as investors and analysts can view how resources are allocated and how each segment impacts overall performance. With segmental report, users can also compare the performance of RHB specific business segment against similar segment in competitors' bank. This will help users to make decisions by understanding the relative performance of segmentals such as retail or investment banking in the competitive market. This allows investors to evaluate RHB competitive position across different areas and assess if it's aligned with industry trend. Here are the snippet of RHB Bank.
Next, Part B, which focuses on interim financial reporting.
MFRS 134 is all about interim financial reports, which cover periods shorter than a year. It lays out the rules for how to prepare these reports, including disclosures, recognition, and measurement. The key point is that the companies must use the same accounting policies as the previous year and include comparative data from earlier periods. This helps make the reports more reliable and relevant. The aim is to give investors and others a clear picture of the company's earnings, cash flows, and also financial health.
In accordance with MFRS 134, two significant events or transactions that might impact an entity's financial position and performance after the last annual report include changes in the fair value of financial assets and liabilities and any new acquisition or disposals. Fair value may fluctuate due to market conditions impacting financial assets or liabilities that are recorded at fair value. Likewise, new acquisitions or disposals of assets or business may significantly alter asset composition and financial measures. These changes directly affect the reported financial condition and can offer insight into current economic challenges or shifts in the entity's operational environment. Both the changes in the fair value of financial assets and liabilities and any new acquisition or disposal should be included in an interim financial report if they have a significant impact on the company's financial position or performance. These disclosures help the company's finance, ensuring that investors and other stakeholders are well informed.
Here are the interim period. On the preceding year accounting period starting from 1 July 2022 and the 30th June 2023, and the current year accounting period starting from 1 July 2023 and the 30 June 2024. If we are using third quarter, the interim financial statement for the third quarter of 2024 must include for statement of financial position, the current interim report is SOFP as at 31st March 2024. As for the comparative interim report is SOFP as at 30th June 2023. Next, for the statement of profit loss, the current interim report is SOPL for the 3 months ended 31st March 2024. As for the comparative interim report is SOPL for the 3 months ended 31st March 2023, and the current cumulative interim report is SOPL for 6 months ended 31st March 2024. And for the cumulative comparative interim report is SOPL for 6 months ended 31st March 2023. And then for the statement of cash flow, the current interim report is SOCF for 6 months ended 31st March 2024. As for the comparative interim report is SOCF for 6 months ended 31st March 2023. Lastly, for the statement of changes in equity, the current interim report is SOCIE for 6 months ended 31st March 2024. As for the comparative interim report is SOCIE for 6 months ended 21st March 2023.